morning, everyone. I make it a couple of minutes past 10, so I think we'll make a start. If the other people who are booked come along and join us a little bit later, then they can join as they come in. Just a couple of things to start with. My name's Mark. I work for the financial hardship team at KCC, so I'm sort of facilitating the event. I'll introduce you to Emma Knowledge from Wave Community Bank. She's going to be talking today about the services that they provide. Just to let you know, the session is being recorded, so we share these on our YouTube channel and via our LinkedIn media, etc. So if you want your camera on, more than welcome. If you'd rather hide in the background, then again, you're more than welcome to keep your camera off. I'd ask if people can keep themselves on mute while Emma's presenting. Please use the raise hands if you've got some desperate, urgent questions, or pop them in the chat or the Q&A, and we'll pick those up at the end. So over to Emma, and thank you very much for delivering this morning's session and for everyone who's joined.
Thanks, Mark. Hi, everyone. I'm Emma Knowledge from Wave Community Bank. I'm just going to share my screen. Hope it works. There we go. Can you see that? I'll take that as a yes. Okay.
Yeah, all good, yeah.
Oh, great. Thanks, Mark. Okay. So I'm going to start with looking at, there we go, what a credit union is, because I know there's going to be a lot of people that don't know. So credit unions are a bit like building societies, but we are not for profit savings and loans cooperatives, and we're run by our members for our members. The credit union world is growing quite significantly in the UK. We are behind the times as far as when you look at the credit unions in Ireland and America particularly, but we have now got over 1.5 million credit union members in Great Britain. Savings have grown to 2.3 billion and loans to 1.63 billion. So they are significantly better figures than the ones we were looking at 5 years ago. The number of credit unions is reducing because there is a lot of consolidation. There's lots of mergers going on, one of which we did. So I'll get onto that in a bit. Common bonds. So credit unions all have a common bond, which is restricted to 3 million people. So for us, ours is a geographical common bond. Other credit unions have industry-based ones, like there's an NHS credit union that are based up in the north and Scotland. Their common bond only takes them down so far in the north because that's their 3 million. We're a community finance organisation, so people save money with us and we lend that out in the local community. We're all about ethical lending. We have a strong social mission, which is about fighting financial exclusion. And we do lots of work with the Stop Loan Sharks project and helping people access financial services that perhaps can't normally. So there's lots of strings to our bows, and we are equally regulated by the PRA and the FCA as the banks and the building societies are. So Wave Community Bank covers East Sussex, Brighton and Hove, Kent and Medway. So anyone who lives or works in those areas can join us. It is a membership organisation, so you have to join us to have savings or a loan with us. Members of Unite in the South East can also join us. And some of you may have engaged with Kent Savers Credit Union previously, and we merged with them in February of this year. So it's been a crazy few months, and that has brought us to the size of 14,000 members, which is great because that's good for our stability. We're a bigger credit union serving more people, and that's exactly what we want to do. And we want to encourage more people to join us. So who are our members? It's basically anyone and everyone. Credit unions are all about inclusion. Some people refer to credit unions as the poor man's bank, and we strongly deny that because lots of people choose to use us for not because we are the last resort. They choose to use us because we're ethical, because we are a cooperative, because we support the local community, and because of our social mission. There's all sorts of reasons why people join us. It's completely true that for some people there is no other option, and we are the ones that help them into the financial world. But people come to us for all sorts of reasons. And I just wanted to highlight for the people here today that we have community group accounts, which organisations that receive grant funding quite often will join us so they can have their grant funds paid into us, and then they use that throughout the year to run whatever project they're doing. So that's something we can facilitate. We also have a basic bank account, which I'm going to talk a bit more about, which we can help people that are in vulnerable circumstances access, perhaps where high street bank access to their accounts is prohibitive due to ID or whatever other reason. So we do a lot of work to help people that are in vulnerable circumstances access financial services. So our membership is predominantly female. And we do have a lot of single parents. I haven't had a chance to do any statistics since we merged, but when we were just covering East Sussex and Brighton, 38% of our members were single parents. So, you know, we have a lot of which, and predominantly probably 80% of those were female. So we are basically helping people that perhaps would struggle to access financial services with high street banks, and particularly one of the products we do that with is our Family Saver loan, which I'll go into detail a bit more with in a moment. We have payroll schemes, which is a massive growth area for us at the moment, so people can repay loans and save with us straight through their wages, and that is now over £1 million lent out to those members. And the vast majority of our members are either in private rented or in social rented accommodation. Very few of our members are homeowners. So with our lending, you don't have to be a member with us already to apply for a loan, and you don't have to have saved with us yet. There are a lot of credit unions that do have those rules that you have to be an existing member with savings before you'll be lent to. We don't do that. You can apply for a loan at any time. You do it online through our website or via the app. We will lend between £500 and £35,000. On the interest rate front, loans up to £1,000, we charge 42.6 APR, which sometimes people say to me, well, that's high. But under £1,000 for a bank is normally an overdraft or a credit card. And for overdrafts, they charge between 35 and 39% APR. So we're not at the ballpark. And the people that tend to borrow under £1,000 from us are people that can't access an overdraft or can't get credit in cheaper ways. So we are significantly cheaper than payday lenders and certainly loan sharks. But we don't claim to be the cheapest on the market. But if you're borrowing under £1,000, we're pretty close. All our loans are reported to credit reference agencies. So if someone's never borrowed before, a credit union is a good place to start, because those loans, if they have small loans with us and they repay those, we will report that to the credit reference agencies, and so they build their score. So a first port of call, if you've never borrowed before, a credit union is a great place to start. All our loans have a savings element. So when you repay your loan, say for argument's sake, you were repaying £100 a month, £75 will go towards your loan, £25 goes into a savings account. That savings account is held as collateral against the loan. So you build your savings, your loan balance is coming down. At the point of parity between the two, you can use your savings just to repay your loan. There's no penalties or fees for doing that. Alternatively, you can just keep going and end up with a savings pot at the end of your loan. And for a lot of our borrowers, that's the first time they've ever managed to generate a savings pot of any significance. We do lend to people on benefits. The minimum income that we ask for at the moment is £125 a week. To be honest, with the cost of living currently, if someone's only getting that much, they're highly unlikely to be lent to, because it just simply wouldn't be affordable for them to pay a loan back. So the priority for us is looking at the affordability of the loan. We do look at credit scores as well, but the main priority is it affordable, because if it's not, we're not going to lend. We have 3 payment options: direct debits, payroll if they work for an employer partner, or child benefit. You can make extra payments and overpayments to a loan. There's no charges for doing that, and there's no restrictions on doing that. You can overpay as much as you like if you want to get rid of your loan quicker. We'll lend for pretty much anything as long as it's legal. We have had people apply for loans asking to pay a loan shark off. Unfortunately, we can't facilitate that because you're basically encouraging criminal activity by doing that. So we have to say no to those, and then we refer people to the Stop Loan Sharks project and the illegal money lending team. We do debt consolidation loans, as they can tend to be larger, on, you know, sort of over £5,000. A lot of what we're seeing now is between £10,000 and £20,000 in debt consolidation. We might ask for an AN1 on a property if they're a homeowner, which is a charge on the property, so that if they sold it, we would get the loan paid back. We would never make someone sell their house in order to get that money back, but it does just guarantee the loan for us on the property. We might also ask for a joint borrower in the house, or we might ask for a guarantor if it's a big loan. It's simply because of the level of risk with the larger loans. We do get people apply for rent deposit. Again, that tends to be an affordability issue. People that apply for rent deposits can quite often simply not afford the loan repayment. So that's sometimes a reason why they get declined. Excessive gambling is something that we see a lot too, particularly since COVID. To give you an example, before COVID, our decline reasons 1% was gambling. Now it's 10%. So we're seeing, and we are talking excessive gambling here. I've seen people with a £3,000 income that are gambling £1,700 of it in a month. So that would be a decline. All of our loans, when they're declined, they are sent an email that is relevant to the reason why they were declined. So it was either affordability, gambling, they're in arrears with their existing loan, they have a very poor credit report, and each of those decline emails then signpost them to a page on our website which tries to help people by changing their behaviour so that perhaps they would be approved for a loan in the future. Now, family saver loans, I just wanted to focus on these a bit. These loans are, for the first loan, it's a maximum of £700. And then with top ups, we'll go to a net £1,200 exposure. That means, so say someone had £300 in savings, we would let them have £1,500 as a loan total. And it's repaid using child benefit. So the child benefit is paid in directly to us. We will then take out the loan repayment and the savings element, and anything that's left would go into their Share 2 account with us, and that can be withdrawn the day it's paid in if people need to access it. The reason why we do these loans is this way, and ask people to repay it this way, is they are very high risk loans for us. We want to help people, particularly single parents, access affordable credit, but they are the most likely not to pay. So if we do it through child benefit, the risk is much less to us, and then we can approve these loans to people that desperately need to get loans for their needs for their families, quite often school uniform, often furniture and clothing for children is one of the major reasons. We have savings accounts, so we have our basic share accounts, which you can have, as each individual member can have up to 4 of. We have Wave Save, which is an online account. So when you remember, you can open it through online banking or through the app. And what that lets you do is set savings goals like, I don't know, Christmas, birthdays, holidays, car, whatever. And you put in how much you want to save and when you want to save it by, and it will tell you how much you need to save each month to get to that target. It's just a good way of managing your savings when you've got things you want to get to. Price Saver is a great account to encourage people that never save just to maybe save a bit, because for the first £200 in the account, every £1 is an entry into a monthly prize draw to win £5,000. There's also 10 prizes of £50 and 10 prizes of £20. It's not gambling. You're simply, by saving into that account, you go into the draw and you might win some money. So if people are putting money on the lottery, then maybe encourage them to put the money into a Prize Saver account. Our accounts are pretty much instant access. As long as we get a withdrawal request by 3 o'clock, you'll get the money the same day. If it's after 3 o'clock, you'll get the money the next working day. So the longest you'd ever have to wait is if you asked after 3 o'clock on a Friday for withdrawal, you would get it on Monday. As a cooperative, we don't pay interest on our savings, on our adult savings. Children's savings we do. Our young savers accounts get 2%, and that's up to age 16. After that, the adult accounts we don't. We pay a dividend, which is dependent on us making a profit. So as a not-for-profit organisation, if we have a surplus at the end of the year, then the board will recommend what dividend can be paid on savings. It's easy to save with us. You can do a standing order, or you can do payroll deduction, and you can do ad hoc bank transfers in. We also offer basic bank accounts. Our adults account is called Engage, and we have an account from the same provider called Smart Cash, which is for kids that are from 8 years old to 16. Yeah, 8 to 16. There's no credit check required for these accounts. So if you have someone perhaps, excuse me, who's had a history, maybe they've been in prison or they've had problems with fraud or something has happened that they're not able to access a standard bank account, this account doesn't have a credit check. So they're likely they will get approved for it. You have to be a credit union member to get an Engage account. And there is, the crucial thing is the £2 a month fee. It's free to use if you're using it in store or online. Excuse me. If you withdraw cash at an ATM, there is a charge for that. All the charges for Engage are on our website if you want to have a look into them. You can have your benefits and your wages paid in. There's an app that goes with it, and you can set up envelopes of cash, you know, sort of like the jam jar kind of principle, to put money into different pots. So, you know, you can cover your rent and your electric and that kind of thing. So it's got quite a good money management function on it. And it's ideal for people that are struggling to access a high street bank account. We run payroll deduction schemes with employers across Kent and East Sussex. What happens is people can save and repay loans straight through their payroll. I have people ask me, why would I bother? Well, saving straight through your payroll means that you save the day you get paid. If you think to yourself, I'll see how I go, and at the end of the month I've got anything left, I'll save it. The answer is you won't save anything. But if you save at the beginning of the month on payday, and you never see it, it never hits your bank account, it goes straight into your credit union account, you're more likely to build those savings. This is a free staff benefit to employers. The only thing it costs the employers is their HR department's time to liaise with us and promote the scheme, and their payroll department to process the payments. Otherwise, it doesn't cost them anything. It does help with staff retention. And as you can see from these statistics, the satisfaction with payroll schemes is very high. So it's really worth considering if you're an employer who doesn't have one already. Just to give you a quick overview of the employers that we currently run payroll schemes with. So lots of local authorities, and obviously merging with Kent Savers, we've now got Kent County Council, Ashford and Maidstone councils. But we want more, and we also particularly would like charities to offer it, because charity staff have very few benefits, quite often don't have the best salaries, so we would really like to support them by offering this as a free staff benefit. We've got a few charities in East Sussex, but I really would like more Kent ones to get on board too. And obviously all businesses in all guises are welcome, because this is a service that seems to be really valuable to workers. We may have seen us on the Healthy Workplaces webinar that we did some time ago with the Healthy Workplaces team for Kent and Medway, but we've been working quite closely with all of the wellbeing teams from the councils to try and encourage employers to help with financial wellbeing of their staff. If you're interested in finding out more about the payroll scheme, we have got a webinar in conjunction with the Money and Pension Service on the 11th of June. It will be on our Chorus website, so please have a look for that. Alternatively, I'll put my email address up at the end, and if you're interested in coming, drop me a line. We do a lot of financial education and supporting people with money management guidance. So we do webinars, series of webinars every sort of 3 or 4 months, and We've covered things like improving your credit score, tackling debt, surviving cost of living crisis, all those kinds of subjects. So please keep your eye out for those. We have a Wave Money guide on our website, which has lots of help on looking at your attitude towards money and how to do budgeting. We have the Money Helper content from the Money and Pension Service on our website. That's constantly updated by them, so it's the most up-to-date help and information. We've got a benefits calculator, which is from a company called Invest, who have benefits calculator with all sorts, I believe, including NatWest. It's free and it's anonymised information. It should tell you if you're entitled to anything. If people come to us and they are in financial problems, we will refer. So obviously, being part of ReferKent, we would refer to you guys. But we do signpost when people obviously need help in certain directions. And our staff are that are customer facing are all doing the money guiders training so that people can be assured of the quality of help that they're getting from us. I just wanted to share this with you because this is something that Fair for All put together. This is to give you an idea of how collaborative working in partnership with a credit union can benefit your clients. So obviously, in this example, this is working with a housing association. So they've shown that if someone has a life shock and then they go a high cost loan, their debts can just get out of control. Then they're not paying their rent, and then you could reach catastrophic levels of eviction. And this has a high cost to the housing association. Whereas with a relationship with a credit union, to help the person get support to make it an affordable loan, then hopefully that will keep them in housing, and also they will get ongoing support from the credit union, and that should improve their financial resilience, because if they have had a loan, they've built some savings. So it's a very simple model, but it does show that the relationship can actually dramatically improve outcomes for people. So we did quite a lot of partnership working, and I just wanted to highlight a few things that we've done. We have a deposit guarantee scheme with Brighton and Hove City Council, where people moving into private rented accommodation, their deposit is guaranteed by the council. Then they become a member of the credit union and they start saving with us retrospectively. So they've already moved into the property. They start saving their deposit retrospectively. They have a target amount they have to get to. Once they reach that target amount, then that money is given to the landlord. The council steps back, and the relationship is entirely between the tenant and the landlord. So that's helped over 1,000 people into private rented accommodation in Brighton and Hove. So that's been a really successful collaboration. We also we piloted it with Salvation Army in Eastbourne, helping people get engaged accounts. So if you have people who have not got the right ID, perhaps have no fixed abode, we can work with charities that are trusted intermediaries to help these people open accounts with us and then access the Engage card so they could get universal credit paid into it and hopefully get them off the street. I've got a bit more about non-standard ID in a minute to explain how to do that, but that in Brighton and Eastbourne alone, we helped over 200 street homeless get into the banking system and start receiving benefits, and other credit unions followed our model across the country. So that was really successful. We have in the last year, we started in June last year, we put a financial wellbeing support officer in the University Hospitals Sussex Trust, NHS Trust. It's one of the biggest trusts in England. And she's done amazing work with their staff on budgeting, money management, helping with credit union services. She does training sessions with migrant workers to explain how UK finances work, go through their payslip with them, explain what the taxes are and what everything is. And that's been a hugely successful project. And I'm talking to a couple of other NHS trusts about rolling out the same thing with them. So that's the kind of collaborating working that's just brilliant. We've had charity loan schemes that we've run with 4 different charities. They're 0% interest loans. The charities put a funding pot in with us. They then put forward the person who who they think they want to give the loan to. We do the usual checks for that person. Can they afford to repay the loan? You know, all that kind of stuff. We then report that back to the charity and say to them that, you know, this is the decision we recommend you make on this loan. And then they decide whether or not they're going to offer the loan to the person or not. Those schemes have been really successful as well, particularly with helping people into accommodation and with helping people who have no recourse to public funds. In Brighton and Hove, we're part of the MoneyWorks partnership, and I just wanted to highlight that because that's something that the local government association sort of holds up as a gold standard for collaborative working in the advice sector. Obviously, we're not advisors, but we are part of that group. And Brighton and Hove City Council have been funding MoneyWorks for well over 8 years. I've been at the credit union 8 years, and it's been going as long as I have. And that is a great piece of collaborative working within the community where the credit union has a voice and supports the other organisations. And then finally, just to say that we do an online training programme for frontline teams and support workers who are out talking to people who may need credit union services. So I've presented to people that are working in hospitals. I've talked to council workers that are out and about, adult support services. If you have a team that you think could benefit from knowing about what the credit union can do, please do get in touch, because I'll be quite happy to do a short presentation to talk about our services and see if we can help. So if you want to join us, the best way to do it is online. So either do it via our website or download the app, and you can do the membership when you download the app. We have a one-off membership fee when you join of £5. What that does is it covers the ID check mainly, and then you deposit £1 into your savings account to keep it open. If you do that online, you'll get a link sent to you to do a one-off direct debit for that £6, which you can complete. Then you can register for online banking and you can see your transactions. You can apply for loans, you can open savings accounts, and you can apply for an Engage card all online. The only one that's actually in the app is Wave Save, and the loans. Prize Saver and Engage are both on the website. If somebody has non-standard ID or they're unlikely to pass ID checks, auto ID checks, which are the ones that we do online, then if you contact us and ask for an e-signature membership form, we can send that to you. And then if you've got non-standard ID, so the gold standard is a photo ID of either a passport or driving licence and a proof of address, so, you know, a bank statement, government letter, government agency letter, you know, just the usuals. That's our gold standard. If you have somebody who is without an account and needs to access one, you can send us non-standard ID, and if it comes as a referral from a charity or a local authority or somebody that's working with this person, we can accept non-standard ID as part of our vulnerable person policy. So if you've got expired passports and driving licenses, we will accept foreign passports as well. We don't require British passports. A GP's letter with an NHS number. What we need is something that's proving that somewhere in the state, these people say this person is who they say they are. So any government agency letters, a UC logbook, a referral letter from a citizen's advice or whichever charity is supporting them, all that evidence, and if you can give us as much as possible, that will all help to go towards us being able to open an account for this person, because we have regulatory rules on KYC, which is know your customer, and we have to prove that we've done our best to prove that this person is who they say they are. However, we don't want people excluded from the financial services system. So if you can give us as much as you've got, and I've had Home Office letters for people that have been trafficked, which we've accepted. You know, if they're in the system with the government, then there's no reason why we can't say, okay, this person is who they say they are. And that's it from me. Please do drop me an email if I'll leave that just there for 1 second so you can scribble it down. I don't know, Mark, do you share the slides with everybody?
Yep. So after this afternoon, later today, hopefully I will share out the slides from your
Okay, great.
presentation, and we also will send out an evaluation form as well. So be really grateful if people could sort of give us some feedback on the session, because it helps us run future ones. Because the more interest we have, then the people slightly higher up the county council food chain will continue to fund our good work. So. We do have one question in the Q&A to start off with. Any questions? Charlotte's asked, how long have you been covering Kent?
It was April 2022 we extended into Kent. So we already had Kent and Medway in our common bond, and then we started talking to Kent Savers in the autumn, and we merged in February. So we've now got a sizable number of Kent members, about 5,000, which is great. But obviously we want to grow very quickly and a great deal, because the more people that join us, the better the credit union.
Okay, thank you for that. Danielle has put a note in the chat saying she missed the email address. Could you pop it in the chat or share it again, please?
Yeah, I'll pop it in the chat, no problem.
Thank you very
I put mine, excuse me, I put mine in the chat, but I'm just interested to know on the negative side, because I think this is fantastic, but on the negative side, what happens when there's a default, and how long do you wait to take any action? And what percentage of loans do fail? In other words, what bad debt percentage do you have?
Yeah, I can't, because we've only just merged. I haven't got numbers for the merged credit union on the loan bad debt rate, but for us it was about 7%. So for Wave Community Bank pre-merger it was about 7%. It's interesting actually, because I've spoken to people that work for Lloyds and they say, wow, I'm surprised it's so low. And it's because we have a relationship with our members. We don't treat them like a number. And when people go into arrears, we have a loan support team. So they will call the individual, they will do an income and expenditure form with them if they've got a change in circumstances from when they took the loan out. So they've lost their job or they've had to go part-time or something. We will do an income and expenditure. We will do a temporary arrangement to help somebody for maybe 3 or 6 months if they're in financial difficulty. We do not rush to go to court. We will go to court. It depends on the individual, on the time scale, because some people simply ignore every letter and ignore every phone call and will not engage, and they are more likely to go to court quickly. Whereas someone that engages with us and will let us know what their situation is, and we can do a temporary arrangement. We're in no rush to take them to court. So it really is like with all lenders, talk to us, have the dialogue, because if you don't talk to us, then that's when things escalate.
Thank you.
We've got a question from Daniela in the chat. Is there any support for people who do not have internet access, please?
Yeah, you can. If somebody isn't online, we can post out a membership form. We can post out a loan application form. If they do want to apply for a loan, we would ask for copies of bank statements. So normally when we assess a loan, we use open banking. So people give us the one-off snapshot to look at their bank accounts to assess a loan. If they don't have any online access, then we would ask to see copies of bank statements, which we can return to them if they post them to us. So yes, absolutely, we can do it the postal route. If someone gives us a call, we can post out to anybody who wants to use that route. But of course, it does mean that the process is slower and the loan assessment will be slower, because it just takes longer, that's all.
Okay, thank you. Got a question from Royal. Do you have any specific account or support for gambling addiction tenants?
No, I mean, we when it comes to gambling, we just refer people on to local gambling charities or Gambleware. It's not, we simply don't have the resources to do something specifically for them. Having said that, just to reassure you, Smart Cash, the kids account, the online system for that, so kids could use it to buy, I don't know, clothes from Topshop or wherever they go, but they can't use that account in off licenses, betting sites or betting shops, anything that is not age appropriate for that cohort, they can't use that account for.
Thank you. Emma's just popped a question in the chat. What is the average turnaround time for an online loan application?
If they do their open banking and they do a loan app and they've completed everything in their loan application properly and what we've asked for, they can get a decision. I've seen it turned around in 20 minutes. If they don't, it takes as long as it takes someone to give us all the information. So generally, on the day that we get all the information from somebody, they will get a decision that day. But they can sometimes take a very long time to send us all the information. So it's as slow as the response from the applicant, really.
Okay, thank you. I think that's all the questions I've got in the Q&A and the chat at the moment. So, oh, we've just got another one. Felicity's just put a note in. I thought I saw a loan rate of 12% or something early on in the presentation.
Yeah,
could you describe?
That's a member plus loan. So that's for members that have 10% of the value of the loan application in savings with us, or that have a good history with us. So it's basically trying to reward good behaviour with us, that they get a lower loan rate. And I think the size of the loan, that I can't remember what the size of the loan was off the top of my head. If you look at the member, if you look on our website, it's the member plus loan. Sorry, I can't remember what the size of the loan was. I think it's over, I want to say over £3,000, but I might be wrong there. But yeah, and if people borrow from us through payroll, we charge them lower interest rates generally, because the risk is less to us, because we're getting the repayments at source from their employer. So staff benefit from lower interest rates on loans, repaying through payroll. Also, with payroll, we are twice as likely to approve a loan than our standard approval rates, purely because there is significantly less risk to us.
Okay, thank you. I've got a thank you in the chat. So, any other questions for Emma here and now? Sounds like we're done, I think. Thank you very much, everyone, for joining. Thanks, Emma, for excellent presentation, very informative. As I promised, I will send out the slides later today and a short evaluation. So I'd be really grateful if people could sort of fill that in online for us. It's only 5 questions. And yeah, so thank you very much again, everyone, for joining. Look forward to seeing you at the next Spotlight session. Thank you. Bye all.